The Hedgeless Horseman here. It's been a while. Like I said in the last video, I had gotten COVID or some flu or something, I think, after Deutsche Goldmesse. And after that I actually had some surgery done, so I've been kinda out of action in one way, shape or form for the last 2 to 3 weeks. And also, I mean, the summer has come basically. We've had really good weather in Sweden, and I just don't feel like watching the stock market that much, especially since most of the time I'm not doing anything anyway. Most of the days I'm not trading anything. If I trade, it's typically maybe 1% turnover of my portfolio. So and that's obviously because like pretty much every single stock I own, I think could do well over the next 12 to 24 months. So that's the that's the play. It's like you buy something cheap, either it's cheap right now, or you think it's maybe cheap or somewhat cheap right now, but it's gonna go up in value over the next 12 to 24 months, meaning that, after the next 10 to 20 news releases, what you paid today is gonna look cheap if things turn out well. So then the only play is to wait until it's not cheap anymore, or you find something cheaper. Basically that. First of all, thanks to the sponsors. One thing I would like to point out that silver has actually been doing quite well, I guess. It has done really well. Today it's down a bit, but I saw like, what was it, yesterday or something? No, not yesterday. A few days ago, when silver was down here, it's like I read some people, sold a lot of juniors or sold all their juniors, and some said I'm not buying any more until whatever that this down leg is bottom or something. And it's like I made a reference, let's say on Twitter. It's like I think we were here or something. Pretty nice rebounds. Like, what do you do when it starts to go up again? If you sold here because you think it's gonna go down and didn't buy more, it's like, what do you do when it turns up? And that's the stuff I hate doing. That's why I don't try to market time, because I think it's almost impossible to know where any of the metals are going in the short term, and especially the juniors. You don't even know if they will follow the metals or not. So to me it's absolutely pointless. I see everybody doing it almost, and almost by definition it means it's a bad way to go, because almost nobody actually makes any money over the long term. And I think that's tying into being too cute. It's like if we take gold, for example, the gold juniors are still, I think, absurdly cheap, and gold is doing pretty well. It's pretty well. It's doing fantastic actually. It's at 23.50 or something. So again, who cares if gold is going? It's a bit over that actually, but who cares if gold might go to 2,200? That's still way above what the juniors, some of the gold juniors or many of the gold juniors are pricing in. So the way I see it is like I can almost not lose unless gold goes to 1,600 or something. Then I might have overpaid for them today, which I don't think is likely. I think we're, in my opinion, it's like I wouldn't be too surprised if this is almost equivalent to this, like maybe 1-2 months of sideways to down action, and then it gets going again. Because this is also kind of a bigger breakout, I would say, than what this was, and this turned into a good move over the next few years, especially if one basically treats this as one large cup and handle. That's or a 10-year consolidation. So it's like after such a long consolidation period, is the bull move over after like 3 months? Like, I don't think so. Might be years left, basically. So again, I'm just going back. It's like, yeah, I think the best bang for the buck strategy is value investing, buying, holding, value shuffle if you need, let's say. But most of the time doing absolutely nothing but hold the stocks. And that's of course not something many people can do. They think, which is very human, that you need to do more to get better results. The irony is that it's most of the time it's the opposite in the markets. The more you try to parry every downturn, the more you miss out on the upside, and the more you're gonna trade away any profits, basically. And that's why what I'm trying to promote, let's say, that you should be, I mean, the way I go about it again is buy cheap and then pretty much do nothing until it's not cheap anymore. So there's no time frame. It can, become not cheap in the next 2 months or maybe the next 2 years. But if you're right on it being cheap on average, not that every play is going to turn out to be a multi-bagger, but on average, the only thing you do is basically wait. And that frees up a lot of, free time, spare time. Whereas if I was a day trader or something, I would literally need to be at the computer. If I'm not at the computer trading every day, I'm not making any money, kinda. Whereas I think the current portfolio, for example, and especially the HODL portfolios I manage, if they do no trading over the next 2 years, I think they will do really well. I can't find, what's better bang for the buck than absolutely doing nothing and still make money in the long run. Yeah. So anyway, let's look at some news and stuff. There's a bunch of stocks. I obviously own a bunch of stocks, and over the last 2 weeks there have been some news and some happenings, whatever. Well, I guess first of all I should just point out, the text disappeared. No, here, okay. So go back to the basics. Like, value for the juniors only really change on news. That's the only time the actual value of the company changes. Yes, it's changes somewhat with the price of metals, but most juniors will not be producing anything in the next 5 to 10 years. Most of them, if they're lucky, they'll be producing in 5 to 10 years. So who cares what the gold price was? Let's say you had a mine that a project got brought into production here. Did it matter what the gold price was back here when the actual mine is starting to sell gold here? No. But it sure probably swung a lot with the swings in gold back here. So I've done the small trading I've done, or when I've gotten dry powder lately. Mostly it's been buying stuff that went down on no news, or went down or stayed put on good news. That's the low-hanging fruit, like the obvious opportunities. If you have 20 stocks, you like them kind of equally much. One stock has a good news release put out that hikes up the implied value. The stock price doesn't react, so you can buy it for the same price as before the value went up. Then it's all else equal, it's the best buy that day. Cabral today announced, a very, very impressive result. 11 meters at 33 grams per ton at Mechichi Northeast target in the AUCU Gold District, Brazil. And what's interesting is, like, from depth in saprolite and weather and altered bedrock, including. So it sounds like, it was both in the saprolite and actually in the bedrocks, like the, lode gold target, let's say. And there were other good hits as well. 25 meters of 2.9, 12 meters or including 12 meters of 5.5, 21. I mean, this saprolite stuff, that should be basically a cash flowing machine. And again, like I said before, I think that's why Osisko Gold Royalties invested in them. It might not typically, I mean, these are just pretty, these are top tier results, obviously. I mean, this is a barn burner. But typically the saprolite results might not look too sexy. But who knows? Maybe the cutoff grade is like 0.1 gram per ton or 0.2 gram per ton. So if you have 1 gram per ton, that's like, would be super high margin in that case. Maybe it's like equivalent of 9 grams per ton underground. So that's obviously what I think the market is kind of missing, both with Cabral, and I think it's starting to get appreciated now, perhaps. But both for Cabral and Altamira, I think that's the sleeper value. That's probably the lowest risk, lowest capex, and I'm not going to say highest potential, but it's for sure the lowest hanging fruit. Just near surface saprolite oxide gold. The results from RC421 at the Machiche Northeast targets are amongst the top 3 drill holes ever drilled at QQ and the best drill results drilled to date outside of the known central MG gold deposits. The Machiche Northeast target is located immediately north of the Machiche main zone discovery and the MG gold deposit, all of which contain high-grade east-west trending mineralized structure. And you can read the rest of the news release yourself, but I mean, these are, I was going to say, central deposit. I mean, there is a lode gold resource already, MG central, and there's saprolite tied to, I think, most of the bedrock deposits actually. And here's where they're actually, drilling this high-grade stuff now. And you can see the historic placer workings. I mean, there's obviously gold being shed all over the place. And you can see the scale bar. So this is a district-wide opportunity. I obviously think they're going to be finding. I mean, the more they drill, the more gold they're going to find. That I'm pretty sure of. And I think, if we go back to Reunion Gold, which is now I think a 800 million market cap company, when Dundee invested in that. The idea was the case was that they thought they would find 500,000 ounces of saprolite gold oxide. Obviously, that was enough to be seen as a company maker for Dundee. 500,000, 500,000 ounces of saprolite gold, near surface oxide, free dig gold. They ended up finding a multi-million ounce bedrock deposit, or think about that the actual main target that Dundee saw, the main opportunity was the saprolite gold. And it seems that Cabral has that in spades. And obviously where you find saprolite gold, there might be a bedrock source nearby, which it sounds like this amazing hole here, for example, that it went into the bedrock as well. Here you can see basically the vein zones. So here you have 11 meters or 33 grams per ton, and that's actually, according to this schematic, that's actually in the lode, so that's not bad at all. Some remains open at depth. It is also open along strike. Find more of these high grade zones, and you have saprolite as the icing on the cake, like the quick how do you call it, like quick return of capital, let's say low capex. You could probably just start digging this if it's like, again, I don't know exactly what the cutoff is going to be. We're going to be learning more about that in the future, but I think for sure they should make money on 0.3 grams per ton, for example. Might not sound sexy, but again, it's like Cabral doesn't have a huge market cap. It's not like it's pricing in much in terms of cash flow, whatever. So you have let's say, easily recoverable gold at surface, and that's kind of leading into higher grade loads. And again, that's kind of I was going to say all over the place. Here it seems that here you have high grade saprolite gold, for example. So not every area. Here you have some red bars here, so it's like it's not going to be totally homogeneous everywhere that you have gold, but this is not too far off from this structure here, which again seems to be high grade gold and pretty good widths. This is not true width, but I think Cabral is going to keep growing. I think they're going to find more gold the more they drill, so it's a growth story, and I think the downside risk is decreasing for every near surface ounce they're finding, basically. So who knows, maybe Osisko Gold Royalties will look to be quite smart with their investment. So I think this is again, it's like if you give Cabral 2 more years, I think it's going to be worth more, and I don't think it's expensive now. First Nordic announced to start out 2024 drilling at Barsele. So this is the Agnico drilling. Grade C drilling has resumed at the Barsele joint venture, which we consider a flagship asset in the company's gold belt portfolio. You can read the details. I was going to point out what we see here. Okay, it's not the most high resolution picture, but here you can see planned DDH collar 2024. So it seems here's one. I think these are also planned holes. This hole as well, up here, up there. So it's not a big campaign, but that's the thing. It's like this is kind of maintenance. I mean, they're basically spending enough money to keep the project in good standing. Okay, and we're going to see it later. Well, we can actually look at it now. I would recommend anyone who likes First Nordic or is interested in First Nordic, watch this interview being interviewed by Resource Talks Antonio. I think this is the best interview, I think, in terms of summarizing the value opportunity in First Nordic. I think it's just absolutely dirt cheap. And they touches on this, that the drilling by Agnico this year, and he's open to them expanding this drill program, but it's like the fact of the matter is that Agnico did the deal with Barsele when they were like sub 5 billion market cap. So let's say 150 to 200,000 ounces per year mine would be at least with good margins, would be for sure material to a company that size. Now Agnico Eagle is almost at $50 billion market cap. So for them to, I mean, what moves the needle for Agnico Eagle? I think they've surpassed Barrick, and Barrick is looking for 400 to 500,000 ounces plus production per year. So Agnico, I think, is the second largest gold company in the world. And they are kind of famous for having absolutely, top tier, huge deposits like Detour Lake, Canadian Malartic. They acquired Fosterville. All of those are like, 500,000 ounces or more, I think, production. With very, very low costs, or Fosterville for a while was basically producing gold almost for free, but like absolute tier 1. Is Barsele a tier 1 project that's gonna throw out 400,000 ounces of production with like lowest quartile costs? No, especially not the production profile. So I would say it's like in its current form, it's simply too small for a $50 billion market cap company. But that goes for almost every gold deposit on the planet. If we're talking multi-million ounce gold systems in tier 1 jurisdictions, there are not many of those around. And there's obviously even fewer that are like 5 to 10 million ounces and, you know, tier 1 quality in tier 1 jurisdictions. I mean, almost every one of those have been bought. It's like, what are they? It's like that's not belonging to a major already. It's like Snowline, for example, 10 million ounces plus, way up in Yukon, 1 billion market cap. That's, I think, the best undeveloped project and the best project not belonging to a major, but B2 Gold bought into it. And then it's like Rupert Resources, which I think is, I mean, the economics are really great. I'm not sure if it's a, you know, tier 1 mine, but it's really good and it's, you know, pretty big. Other than that, there's not many around. And like Taj mentioned in the interview that he believes this is basically, I don't know if condemnation drilling is the best example, but to his point, like Agnico want to see that they don't leave an elephant behind, basically. Because here you obviously see this is the main resource in the Avon, Central and Skiråsen zones. This is the Norra VMS deposit, this is the Risberget target where they've already hit, and they don't have it outlined, but obviously you can see that internally they probably have a resource here. So where are they drilling? I mean, there's no drill collar near this, there's no drill collar near this, there's no drill collar near this, there's no historic drill collar near this. This is a step out, and these are basically all located between the main Barsele zone, and this zone here is around 2.5 million ounces. Now, if you change some of the assumptions like the cutoff grade and factor in that the gold price, this was done at a gold price of $1,300 gold. We're obviously at like $2,300 gold now. So this is the 2019 resource is conservative in many aspects. So today it would be a bigger resource if they redid it. And here you have Risberget. So they're basically, and there's been a few tests here, as you can see. But I mean, what it looks to me is like, okay, if this is too small for Agnico, I think what they're doing now is just basically trying to see, and I think this might go hand in hand with their, let's say, idea that, hey, you know, we should probably give up operatorship to First Nordic, for example. But let's see first, it's like, let's put in a few holes here and there to see that we didn't leave an elephant behind. I mean, let's say they hit on a few holes here. Again, this according to Taj, this is already a mine. And at depth and along strike, just from the, you know, known zones, and they haven't closed them off, so they think this is gonna 3, 4, maybe 5 million ounces. So let's see this as like 3 to 5 million ounces here. Okay, still probably not large enough for Agnico. But if they, let's say, you know, probe around and they hit, it's like, let's say they hit in a few holes here, it's like all of a sudden you have added, I don't know, this is the 1 kilometer scale bar. This is like, what, over maybe 1 and 1.5 from this, the edge of this resource, and these step out holes are like 2 kilometers away from Risberget, for example. So if they hit on a few here, it's like, okay, maybe it's a lot larger. Maybe I was going to say entire 8 kilometers of strike is actually mineralized, let's say. And then you have some real wildcatting up here. I don't know if they're going after VMS targets there or load gold targets, but it's like it makes sense that they're looking for. I mean, while they're drilling, while they're spending money, they might as well be looking for, you know, game changers, let's say. Yes, there's one hole down here, I guess. I don't know what that is, looking for maybe parallel zones or something. But, I mean, if they put in the holes or did infill drilling, that's not going to change it. That's just going to move this closer to, you know, 3-4 million ounces, whatever. But that's still probably going to be too low for Agnico. That's why they have this on the back burner. But if they have some game-changing success or lucky or whatever, then they might need to rethink it. It's like, are we actually gonna let this go? Because now it might, if they think, hey, this could actually turn into an elephant just within this project. I mean, the thing to remember is that First Nordic has much more ground than Agnico has at Barsele. Because First Nordic owns the rest of the northern and southern strike of this belt. So they have plenty of exploration potential. Agnico's deal is for the Barsele project, which is a big project. But still, they don't, obviously, if we're talking pure exploration upside, First Nordic has much more exploration upside than Agnico. And Agnico obviously won't be drilling First Nordic's 100% owned ground. But I think it makes sense. Again, they don't want to have pie on their face. That's like, oh, we walked away from a project, and then First Nordic, let's say, takes over operatorship, and they do a few holes. Like, oh, we just extended the strike by 1 to 2 kilometers. All of a sudden, we can start talking about maybe 5 to 8 million ounces gold, if you know what I mean. So it makes sense from a corporate perspective, I think. And especially, again, given the size, that if they need tier 1 world-class deposits, they might as well make sure that, or try to make sure in a cheap way, it's like that they're not walking away from a world-class deposit in the Barsele project. This isn't really news tied to... I don't own Kincora Copper, but I would just point out that Anglo Gold just did a somewhat similar earning deal with Kincora Copper. And here you can see Kincora's in the red. That's Kincora's land position. The closest they have to Inflection are these claim blocks, as you can see here. This is Anglo Gold Inflection land package here. Inflection has even more land packages here, but I guess that's not in this. Well, okay, yellow, yes, that's Inflection. So this is also Inflection. This might be Inflection as well, I guess, or maybe it's Evolution. But here you have, and that's 100% owned by Inflection. Here you have Fortescue, the multi-billion-dollar iron ore producer, and here actually Fortescue has a deal with Magmatic, but it's like, so obviously Inflection Resources is kind of a trendsetter. And what's interesting about this, first of all, this is the Duck Creek target. This is the target that now Anglo Gold decided to speed up and execute the phase 2. So they're putting Duck Creek in a phase 2 with an early exercise. They actually had to redo the deal a bit for Anglo to be able to exercise it this quickly. And I was going to say, lo and behold, Anglo Gold does a deal with the neighbors, which has a few interpreted complexes to the northwest and west of the Duck Creek target. What does that say about, I mean, if we're talking signal value, or a few things to take away. A, this is also, I'm pretty sure this is also, undercover. So it's obvious that Anglo Gold believes in this going undercover. So the geophysics approach, what Inflection has done, they're buying into that because they're getting even more aggressive in this belt with more of those targets. And most of the targets that belongs to Kincora are in the vicinity of either Duck Creek or at least neighboring the rest of the strike belonging to Inflection Resources. So do I think they're kind of excited about Duck Creek? Yeah, I think so. And obviously it might make sense to do the deal before they have, actual... I mean, if they think they're going to make a discovery, whatever, I assume they would get a better deal with Kincora if they do a deal before, let's say, Duck Creek produces that discovery hole, because I think that could, it would certainly light Inflection on fire, probably the neighbor as well, if they have, targets right next to Duck Creek. So then it might be harder for AngloGold to get a cheap deal, because the deal with Kincora is not as good as the one they did with Inflection. And interestingly enough, they've actually capped the earning deal. So whereas in the case of Inflection, AngloGold has to get 75%, they have to produce a PFS. And if you listen to Alistair Waddell, for example, who's worked at several majors, I mean, he's suggesting that if you to do a PFS level study on a underground porphyry body, that could be $100 million plus. So what the AngloGold did with Kincora is that they capped it that they can get 80%, or the last percentages to get to 80, either by spending $25 million on exploration or producing a PFS. So let's say a PFS costs $125 million, and they spend $25 million on exploration. They would still get 80%, and then Kincora needs to pitch in because they're not free carried to a PFS study. That's I was going to say night and day potentially in terms of what you get out of the deal if you're Inflection versus Kincora. I'm not saying that the Kincora deal is not good, because if you make a discovery, it's going to be great for Kincora, obviously. But I think it highlights just how good Inflection's deal is. That AngloGold, to get 75% in one project, might need to spend, like, at the end of the day, maybe to get it to 75%, maybe 150 million. Free carried 150 million to reach a PFS. That's multiples of Inflection's current market cap, not to start off with, and then we have the value what they find that Inflection gets 25% of, plus 1 to 2%. A 1 to 2% NSR, and rule of thumb seems to be that 1% NSR is like 5% project interest. I don't know if Duck Creek, if they have 1 or 2% NSR there that they would get. If it's 2, then they have basically, I guess, a de facto interest at that point of 35% in something AngloGold decided to get to a PFS stage. If they do that, I would think it's at least has 1 billion plus MPV. 35% of that is 350 million, and of course it could be much more than 1 billion. This is again assuming we don't even know if they're gonna find something, but it's like assuming they find something of interest to AngloGold, then I think 1 billion NPV is like bare minimum. And 35% of 1 billion is obviously 350 million, and I think Inflection's current market cap is like 21 million. So that's more than a 10 bagger on a $1 billion project. Just on one target or one project out of, I don't know how many target areas Inflection has, like 24 or something. It kind of goes to show just how much I like Inflection. I think it's absolutely ridiculously cheap. Yeah. I just brought this up to remind me to talk about Magna. Magna is still in most of the larger HODL folios. Magna is the largest holding. I actually bought more Magna in this recent dip because, again, the way I see it, if price goes down without value, that's just a better buy. So I've been buying the dips in Magna. I think I bought some for myself today, for example. This is the stuff that should come automatically to value investors. My hopes is that people, if they like that way of doing it, like value investing, it should come automatically. Okay, you see something that you think is worth X. It drops in price on no news. That's just a better buy, all else equal. And what I would point out is, again, what I really like about Magna, for example, is that I think Magna is significantly undervalued based on what is known today, what is confirmed today. The known resources at Green Hill and Shakespeare, and how advanced Green Hill and Shakespeare are, and how close we are to production from Green Hill based on what is already known. All the exploration upside is, in my opinion, risk-free reward. If they hit at Stumpy Bay, I mean, imagine they make a new discovery, a material discovery, could be worth hundreds of millions, and you bought it when it was undervalued just to what they already have. I mean, if they find nothing at Stumpy Bay, I think Magna is, it's cheap right now. If they find no additional footwall discovery, I think Magna is still cheap based on today, or at today's price. You cannot pretty much, that's the hybrids that I really love. It's like, okay, I don't think I'm making a mistake now by buying it. And I don't think I'm taking any valuation risk. Whereas, like, obviously in Inflection's case, for example, they actually need to find something for this to look cheap. At the end of the day, yes, they have so many targets to kick. I think, based on the balance of probabilities, they should find something. And in that case, Inflection should go up multiples, many times over. I'm not ruling out a 5, 10, 20, 30, 40 bagger, depending on what happens. It's no guarantee though, but from that valuation, in the case of Magna, it's like you don't even need really, I mean, anything can, go wrong. It's like, oh, they start production and they can't make any money on it, which I think is highly unlikely given they have the best team you could ask for, basically. So I put that as a low risk. So I think the margin of safety in Magna is extremely real as it gets, basically, because most projects even, take many gold developers. Yes, you have a resource. Yes, you get the permits. Yes, you find the cash. You start to build it. It turns out to be a money sink, and let's say it bankrupts the company. So that's like a mirage, and the value was a mirage in that case, or in the hands of those operators. In the hands of Magna, I think Green Hill for sure has a lot of value. I think the chance of success is significantly higher than the average junior developer. So I think the margin of safety is exceedingly real in Magna, and I think all exploration potential, there's no downside risk to it. Yes, let's say they drill and find nothing at Stumpy Bay. Could Magna sell off? Absolutely. But what would that mean? Let's say Stumpy Bay misses, they don't find anything at all. Okay. Let's say the price goes down 10%. Let's say it's down to 105 million market cap. Well, that's just making it extreme, even more cheap relative to what they already have at Green Hill and Shakespeare. So it makes no sense that it even should go down. It's just cheap become cheaper, and in that case, I'll probably just buy more. And that's the stuff I like. And the same, obviously, the opposite of that is, or other flip side of the coin is, if a company puts out good news and the price doesn't change. Western Alaska has, the chart is pretty horrible if we look from IPO. The funny thing is, like, not much has changed about the project, but share price changed a lot. A high of 6.25, it went down to 0.49 perhaps. Yeah, 49 cents. Yeah, 49 cents. Extreme volatility, yet not much change for the company. That's just absurd. I participated in the latest placement. Like I said before, they have 75 million ounces AU equivalent at like almost 1,000 grams per ton AU equivalent. That's not a mine in itself, I don't think. At some price obviously is, but it's like if we're realistic. They just need to find some more, and then you probably have a really high quality mine. At those grades, they should be making bank, obviously. I was going to say at almost any metal price, but you get my point. If you have 1,000 grams per ton AG equivalent, that should be quite high margin.
So they're going to be drilling lateral and stuff like that. So I mean, they just need to find the extension, and they have a whole district to explore. So do I think that at the end of the day, when all is said and done, Western Alaska is going to have something mineable? Yeah, I think so. I think they will prove up a really good mine, and when that happens, even if you account for more dilution while they're doing that, I think this is going to look cheap. I mean, if they raise 55 million tomorrow, diluted by 100%, market cap goes up to 110 million, and they prove they have 200 million ounces AG equivalent to 1,000 grams per ton AG equivalent. Obviously that's going to be worth a lot more than 110 million. That's my point. In the meantime, the market will do its shenanigans. The market knew they were going to raise, so of course, I guess brokers and whoever who want to get into the race, they have no reason to see the price go up. They want to go down because they're going to buy back anyway in the actual placement. And that's why you have these brutal corrections. But it made absolutely no sense from a value perspective. But that's the thing with the junior sector. The value at extremes is an afterthought. If there's more sellers, and the sellers are spurred on by, they're going to be needing to raise money, so let's bring down the price. I have no reason to not sell because I'm going to get in and maybe get some warrants. Then there are going to be a lot of sellers. Doesn't matter what the value of the company is. There's just going to be more sellers, and it makes sense for the sellers to keep pushing the price down. Because haven't been enough buying power in the open market from retail to keep the prices honest anyway. If there were funds that could buy this and were, really supportive, and it's like somebody started selling here because they think they get a private placement, and some big buyer came in and just ramped the price, yeah, they would lose. But until then, because this is the dumbest sector there is, and as most retail do, they don't buy because it's cheap. They buy because something is going up, and they sell because something is going down. So they're probably one of the easiest sectors to actually get these kind of cascading moves going. So yeah, I mean, I don't know how this is going to play out, but I think if they just show that they have an extension, I think the game is on. And at the end of the day, fast forward a couple of years, I think Western Alaska could be materially higher. It's also in the HODL folio, of course. Altamira Gold, this was from May 22nd. Quinton talked about this. I mean, 146 grams per ton. It's like finally we got 1 grammer over considerable widths in the Kajura project. And of course, they have 700,000 ounces already within this project in the central deposit, which is around here. Maria Bonita is around here. This is still early stage, and it's a complex system because you can see there's folds and there's a dike and yada yada. So this is the long intercept, but it's like this is not, it's not deep, it's not cut off in any way, and of course it's like it's open to the north, it's open down deep. We have no idea what's happening in other places, and again it's just been tested to shallow depths. So what happens if they drilled a 600 meter hole somewhere here? We have no idea. So this is still early stage, but now we have kind of proof of concept that there's 1 gram per ton, or 1 gram 1 gram per ton at considerable width. And again, if it starts at surface, metallurgy looks good. There's saprolite potential here. I don't think you need a lot here. If they find 1 million ounces at Maria Bonita, they have 700,000 next door, which is also wide open. Then you already are up to 1.7 million ounces. Good infrastructure, should be good margins because they're all starting at surface. Metallurgy looks good. Some parts here is like you're immediately in ore basically.
plus you're starting off at the saprolite. So if they find some saprolite, could that have up and running at very low capex? Maybe they can fund the exploration programs for the rest of the. I mean, they have a huge land position. This target is not dead, the Apiacas, and if you look at that project, there's like alluvial gold over kilometers. I mean, the scale bar here is obscene. This is a 60-kilometer scale bar, and this is, I mean, what is this, like from here to here? There's like 40 kilometers. There's gold all over the place. And then they have the porphyry targets, which they haven't touched yet. So it's like there's a bunch of irons in the fire. I think Altamira is really cheap. What's the market cap actually? 27.5 million. It's like, that's the beauty of this market. Yeah, sure. It's like what we know, and has been the case for quite some time. It's like there's been enough disgruntled retail people or investors overall that it takes a lot for the share prices to, or it takes a lot for there to be people that actually get greedy on news and can actually overshadow this constant selling pressure from people who just want to get out of the sector. That's true. It's like we now have confirmation that you can produce 100 plus meter runs of 1 grams per ton, and this is still early days. Is this the best hole they're ever gonna drill at Kajuro? I don't think so. And it's wide open, especially to the north. I think 212 meters or 0.8. I mean, that I was gonna say that doesn't just fall from the sky. Maybe, I mean, here you can see the soil on them. They haven't even drilled up here yet. So yeah, I mean, when you think about it, this is early on. They're getting 100 plus gram meter holes. They have saprolite potential, and this is just one target. And they have 700,000 ounces in the bag already, which people forget, of course. And they have porphyry targets, and they have the Apiacas project. So you basically get an empire. You get a gold and porphyry empire in Brazil, this close to infrastructure, building a mine here. I don't think the permitting process in Brazil seems pretty quick. So the threshold for success here, I think, is really, really low. You have a wide open Maria Bonita target. Starts at surface. Should be really cheap to mine. You have the central deposit, 700,000 ounces, not far off. And you're paying 27 million. I don't know what the cash position is. Maybe down to 3-4 million. Not 100% sure. And of course, like Ken GPS points out here, the thing is that when they did I think it was auger drilling, when they did the shallow, I think stage 1 drill hole. I think that's the auger drills, the whites here. These, I think. Yeah, so here you can see 50 meters 1 gram per ton, 45 1.4, 50 meters 1.1. Here you have a bit low, but still it's like 31.2, 0.6, including 6.2 at 3.6, 71 at 0.6, 7 meters of 0.5, 69 meters of 1 gram, 28 at 0.9, and then some of the phase 2 results is like you can see this was actually really good, but it's like 53 meters of 0.7, 10 of 0.4, 10 of 0.3, 105 at 0.5. I mean, this should be economic. Still, I mean, the phase 1 holes get quite a few 1 grammers, which should be, I think, highly economic. And they used in the phase 2 smaller drill core. So if there's a nugget effect, which Quinton has alluded to, he believes that's the case. I mean, why shouldn't there? Because some of these holes are quite close to the other ones, and they still show lower grade. So what is the true grade? I mean, that's going to be the important thing in a mining scenario, obviously. So what if the true grade is kind of underrepresented in the smaller core drilling? So they're sending off larger samples for assaying. So if that comes back, that's like, yeah, we resampled it with larger sample sizes, and the grade jumped by, who knows what it jumped by. It's not sure. We're not sure it's gonna jump. If that jumps, we can kind of, I think, somewhat assume or should include or calculate for the fact that, okay, maybe most of the drill holes actually have even higher grades. So we need to account for the fact that the actual results are better than they look, probably, in a mining scenario. And of course, it's a mining scenario that's more important than what the actual assay grades are. So I think there might be, first of all, again, this is wide open. I think they're going to get more success here. I think this is going to grow, and we have that optionality that, hey, maybe, because I mean with a larger sample, I don't think there's the grade's going to go down. If anything, I think we have a optionality on the upside that, hey, with larger sample size, it might turn out that the grades are actually higher. Okay, Homerun Resources. So I've talked about Homerun Resources. Not too much, maybe, but so, and I've said that, it's like, I'm not a silica expert, but to me, I bought into it because it just felt like a great risk-reward setup. That, okay, if you have what seems to be an exceptionally pure silica deposit, you're probably gonna be able to turn that into a business. I mean, it's kind of, I was going to say, akin that you find out, I mean, this is just an example, of course, but let's say, oh, we found a 10 gram per ton underground lode gold system. I mean, that's gonna get mined, basically, unless it's, super small, whatever. But in this case, this is silica sand that starts at surface. It's a free dig. It's a quarry operation, and it's not out in the middle of nowhere. So building a mine out in the middle of nowhere for lode gold, yeah, then you, even at 10 grams per ton, you probably want, I don't know, at least, a million ounces, for example. But I just got a sense like, hey, I think this sounds very attractive. And then they announced this. LOI with CMEX for up to 365,000 tons of solar glass per year. Okay? So what people tell me is that solar glass, if you buy it from China, basically the cheapest solar glass you're going to get is, it's going to cost you like $1,000 per ton. $1,000. 50% of that is shipping from China. So their plan is basically, so CMEC plans to produce up to 5 gigawatts in annual production, 10 to 12 million solar modules including bifacial glass on glass in Camaçari, Bahia, Brazil starting in 2024. That's this year, right? And you can read here that's like Brazil appears to be, I mean, they seem to be really on the solar bandwagon, that they're after China in terms of, I guess, megawatts in the pre-construction phase. So insane demand for solar in Brazil, and Brazil, or solar, needs silica. So their plan is basically, I think, to produce solar glass, set that up right next to CMEX plant. What do you think the transportation cost is going to be if you have super high purity silica that you don't need too much to upgrade? I mean, if you compare to the lower, if you compare to the lower grade stuff that needs to be upgraded and then shipped to wherever the
customer is. Let's say you start with lower grade silica sand in China, you need to upgrade that, and then you ship it to Brazil, for example, and it costs $500 or whatever per ton to ship it or something. I mean, including all transportation. You don't need to get CEMEX to pay $1,000. If your costs are, I don't know what the costs are, but let's say it costs you $150 to produce solar glass, and then just ship it right next door, basically to your neighbor. Anything above $150 in price, selling price, to CEMEX is pure profits. If you sold it for half what it would cost to get from China, $500 per ton, the customer would be happy because they paid $500 instead of $1,000, and Homerun would make a lot of money if their costs are like $150 per ton and they can sell it for $500 per ton. That's a win-win, obviously. Both companies, even though yes, lower selling price than $1,000, half of that, still it would be a huge win for both companies. This makes a lot of sense. And when you start to do some figures on it, it's like, okay, up to 365,000 tons per year, and this facility starts this year. I don't know how quickly they could get that operation up and running, and we don't know. This is an LOI. But do some crude calcs on what the potential cash flow could be. If what it looks to me is that if just this LOI translates into an actual agreement and later production, which I think is, I mean, I would guess it's about 50% chance of that happening, because it's, again, seems to be a win-win. I mean, CEMEX couldn't probably get cheaper solar glass, so they sure want cheap solar glass, which is kind of, I mean, right next door, don't need to take the risks or time or the prices to buy it from the Chinese, for example. So why wouldn't they really want to get this going? Because they could maybe save a lot, and at the end of the day, that's going to make them more competitive, yada, yada, yada. So if only this LOI turns into a materializes, let's say next year, I think that's a company maker in itself. I think that would make Homerun a multi-bagger. I mean, obviously nobody knows for sure it's going to happen, but if you do something like, okay, let's take half of these tons per year, and let's say or less than that, let's say 150,000 tons at $200 per ton. The market cap right now for Homerun is around 55 million CAD. That's a company maker, and that's for only 365,000 tons per year, or 150,000. Homerun's capacity is probably multiples and multiples. I think Brian recently talked about, I mean, they can see, like, I think, shipping 2 million tons of silica. That would be for different uses, of course. But think about that. If even 150,000 tons per year of silica sand getting shipped and upgraded, that's a company maker. And you have, let's say, possibly 1.85 million tons left of capacity to produce to sell to other people, other types of companies, whatever. Maybe low margin, more you ship the actual sand, you don't upgrade it, whatever. And that's, I think, coming in the pipeline as well. So imagine you have this happening. Imagine you have a deal with someone else for 500,000 tons or more silica, and maybe lower margin, or probably lower margin, not solar glass, but it's like just the silica, whatever. Maybe you get I don't know, $150 for it. I'm just making stuff up now, but I think that's conservative. and maybe it costs you $50 or whatever. Okay, so $100 margin per ton. I hope you get the point. That's why I think, to me, this looks still like an absolute no-brainer. When the news came out, I was tempted to write in the forum on CEOs, like, I think this company is gonna go up 100 to 200% after this. Because if you factor in this, or the deal here, what it could mean, if you think there's a 30% chance of this happening, even if you cut down the assumptions by quite a bit, I think it will make Homerun way too cheap today. And just based on this LOI. Apparently, there was a big seller out there, so on the day of the announcement, the stock traded down for most of the time. So I bought across all portfolios, basically. All personally, for the HODL folios, and this is one of those, again, going back to the point, like, I think this changed the implied value a lot. Price went down. Yes, there might be people front running the news, maybe it got leaked in Brazil, so the run up prior to the news was from people who kind of was front running something like this. Sure, okay, and then they flipped, they took profits when the actual news was announced. To me, that's still chump change. I mean, yes, they made money on it, but it's like, what this could mean for Homerun over the next 6 to 24 months. I think they left the majority of the money on the table by flipping from whatever they bought in at, like 50, 60 cents, flipped it at 85 cents. I was buying when they were getting out, because I think the way I see it, this was basically they announced the possibility of a company maker, and that's just one deal of possibly many. So yeah, I'm without knowing too much about silica, but I can appreciate the numbers, and I can appreciate that, hey, this actually, an LOI like this, that you have, third party validation, basically, hey, we want you we want you to supply us with silica sand. Then it's starting to get really real all of a sudden. And when you do some crude calculations, yeah, you need to have very pessimistic assumptions for this to not make Homerun cheap just based on this, I think. Homerun, I think, is up to top 3 position in some HODL folios. I mean, I averaged down and it's gone up a bit, but it's like I'm not. I've actually been averaging up lately, so I don't think. I'm not sharing this reason. I mean, I was in the placement, so I'm up on that. But I've been averaging up because I think this is the start of something. I don't think this is the time to take flipper profits like the one who sold. But anyway, that's my view. Brixton Metals commences fully funded 2024 drill season at its Thorn Copper Gold Porphyry. Brixton, problematic share structure. There's a lot of shares out there, which can make it hard to move unless you find an absolute barn burner. But we saw that with Hercules Silver. Everybody was complaining about their share structure. They put out one good hole, and that stock just got lit on fire. So Brixton is going to drill 12,000 to 17,000 meters across several targets, collect 2,500 rock and soil samples, as well as 9 square kilometers of ground MT geophysics survey. They began drilling at Camp Creek. So how do I view this? Brixton has a market cap of around 52 million CAD. BHP has cashed them up twice now. BHP, the plus $150 billion company. Do I think there's some size potential here? Do I think the potential price is high? BHP says that. BHP probably are just after stuff that could be, 3 billion plus MPV kind of stuff. Multi-billion deposits. That's only what gets BHP interested. We know what the market cap is, so basically Mr. Market is pricing in. There's no chance in hell that Brixton is going to find something that BHP thinks could be there. I don't need to be a genius to figure out that if BHP says Thorn has potential, and Mr. Market says it absolutely has no potential, I'm going to go with BHP. What's going to make that? But BHP obviously is not in the open market buying. They're putting in money in a private placement. What's going to get the market excited? That's another question. Obviously, a barn burner hole would do that. And we don't know what the threshold is for that. But I would say one good real result that makes Brixton to start going on an uptrend, then I think the rest will take care of itself. Because then people will, when nothing changes, sentiment is price. If momentum starts to get going up, then people are going. You know what the forum is going to say? They're going to be talking about the fact that BHP is here. BHP is going to, I mean, you can front run what the forum is going to say and what people are going to say who just bought in and start to pump it, if you know what I mean. And in this case, we fortunately have BHP in, so it's not a pump. You're actually pumping with the truth, saying that, well, BHP is in here, so they might acquire it one day. And obviously, BHP has the deepest pockets in the world. And they demand the highest prices out of any mining company. So to say that the blue sky potential is obscene is an understatement. BHP is saying the blue sky potential is obscene relative to our market cap, because you know that BHP wouldn't give two shits about something that's Mr. Market thinks it's worth 52 million CAD. So do I know what's going to happen? Absolutely not. I just know they're going to be drilling several targets, and I think if they get a barn burner or something, what a barn burner is in the eyes of the market, I don't know. But if they hit something that gets the market to believe again and starts dreaming, I mean, then I think it could get fun. Obviously, blue sky would be like they hit more than one hole of 800 meters of 0.8% copper equivalent. Then I think hell could break loose, basically. I don't know that's going to happen. I just know what we're paying for it. I just know that the market is pricing in that there's probably no chance that's going to happen. I think the market is overly pessimistic. Kingfisher. I participated in this recent placement. I probably talked about Kingfisher before. I mean, I think it's a pretty simple deal. I don't know if the share count has been updated, but let's say 10 million, 11 million market cap. The drilling district scale anomalies. Here, I love these slides. I think Kingfisher has done a marvelous job with proving their point. So here you have the saddle deposit. That's a pretty big deposit by GT Gold. It proved up, they proved up something, not too much drilling, that later got sold for, I think, 460 million to Newmont. Copper soil anomaly, you can see, you could fit it basically here. Here's a bit smaller. But there's a lot of smoke here. Gold soil geochemistry. This is much larger than saddle deposit. This overall here is much larger than the saddle deposit. So this is kind of like Brixton in the sense that I don't know what the chance of success is. Maybe it's 20% that they're gonna make a barn burner or something. But I know if they do make a significant discovery hole and it's starting at 11 million market cap and this turns into a 460 million takeover one day, how often do I need to be right? Not often.
a 10 bagger would be 110 million, let's say. A 20 bagger would be 220 million. And that's still not, let's say, top tier discovery. I mean, a real copper mine would yes, they can be. The net present value of some of the large copper deposits, obviously, billions of dollars, etc. It's like, are we gonna fetch that in the market unless the copper sector is hot? That I don't know. But if we're talking strictly from a value perspective, down to the basics. There's a lot of smoke here. They've already hit stuff as well. I mean, the Mary deposit here, for example. So we already know there's a mineralized copper porphyry. Here's Mary. So we already know there's something there. And this looks to be pretty good idea where it might be. So what are the odds? I don't know. But the market is pricing in that there's almost zero chance that Kingfisher is going to prove there's something here. And that looks incredibly pessimistic. I can buy it if the market thinks, hey, there's a 20% chance that there might be something here that they can prove up. But at 11 million market cap, there's basically no chance priced in. And of course, as always, there's we don't know when it's gonna happen. Maybe they need another season. So yes, the market can look smart for the time being until it looks super dumb immediately. That's one thing to note. That the market might look right and might look right and might look right, and then boom, super wrong. Then you get the payoff. But I don't know. It's like, okay, if Kingfisher, if you had similar size positions, Brixton and Kingfisher hits something. They make a discovery. They make a significant discovery. It's going to turn out to be, a saddle type deposit. And that's not even I don't think saddle is considered world class, but let's say a saddle type deposit. That's going to pay if Brixton goes to zero, and vice versa. If Brixton proves up a barn burner from 52 million market cap this year, it starts to run their own, they show that, hey, now we find a higher grade core, whatever, at Camp Creek, and that turns into a success. It's going to pay for multiples of other similar stories where you kind of lost your ass. That's the thing. So I'm not going all in on any of these early discovery drill stories. And like I said before, pre-discovery stories are not my favorites, but some of these juniors are, in my opinion, just so cheap that if you diversify away the company risk, meaning if there were 100 Kingfisher Metals high risk, high reward situations out there, I think a good portfolio, or I think if I put 1% of my portfolio in each of them, so I had 100 Kingfishers in my portfolio, 1% each. I think that, given what the valuation is right now, I think you wouldn't need many Kingfishers to work out of 100 to pay for a majority that didn't find anything. Simple as that. By the numbers, I think these are no-brainers. It's just that if you account for the high risk, a no-brainer in this case means that I want to have a position, I want to have exposure, but I don't want to make this a position as big that it could, basically significantly damage the portfolio. So I wouldn't have 10% of my portfolio in Kingfisher even if I thought it was the cheapest high risk, high reward play on the planet. I don't think. Because maybe the chance of significant success is 20%. So 80% chance you're gonna get cut in half. But if that 20% hits and it's gonna possibly do really well, then yeah. And of course, of course, it's like it might be super cheap now, but the market is also dumb in the sense that, I mean, most of the discoveries, the one that make these real discovery holes, I mean, they're not going to go up 10x on the first day. So even if one is like, okay, yeah, I get your point that it's cheap, but it's like, hey, if they put in a discovery hole, it revalues 100% on the first day. I mean, depending on how good it is, of course, could be more than that, and it could be less than that. But let's say it revalues 100% to 22 million, or whatever. That might still be super cheap with lower risk. So that's what I want people to think about. I mean, that you don't, or let's put it like this. Let's say you have 1% in Kingfisher. No, let's say 0.5% of your portfolio in Kingfisher. Kingfisher makes a discovery hole this season, like a slam dunk hole. I don't know what the results would need to be, but let's say 700 meters of 0.7 CU equivalents. Okay? Stock goes up 100%, so you're up to 1% portfolio size, position size. Maybe at 22 million, after whatever the discovery hole is, it's such a no-brainer at 22 million after that hole that, yes, my position doubled to 1%, but I should have 3% now. That means, in that case, one would need to average up and triple the position after it's run 100%, and that might be 100% logical. Which also goes back to what I talk about a lot, I guess, about the fact that I don't believe in strict rules. That's like never chase, sell on a double. So in that case, if you stick to strict rules like that, let's say they put out the absolute barn burner, your position doubles, and you follow some strict rule, never chase and or sell on a double. So if you're not in the stock, you're not going to buy because you've been taught to never chase, quote. If you are in the stock and it doubles and you're taught to sell half after a double, so when the position goes up to 1%, you sell half, so it's down to 0.5% again. Whereas if we're really, really rational about it, maybe it warrants a 3% position. So if you didn't own it, and you should put 3% of your portfolio in it post-discovery, you won't, because you follow the rule of never chasing, okay? You lost out, or that's a dumb move. Or you're in it, and you sell and drag it down. You sell half and drag the position size down to 0.5%, 0.5%. Whereas in reality, let's say nobody knows for sure, of course, the exact number or whatever, but let's say rationally we come to the conclusion one should have 3% in it. You're underweight by 6 times. That's also a grave mistake, obviously. That kind of stuff really, really adds up when you think about it. Really, really adds up. That's probably one of the big things, actually, when you think about it, that you're in something, it got better, it's up 100%, and you take half of it off the table. And if it's starting from a small position, maybe you should have tripled your position. Long-term compounding is like, that's insanely large mistakes to do. I hope you got, or you get my point at least. Cabral Gold. Yeah, Hannan as well. Hannan outlines a significant copper gold porphyry at Previsto Central. I mean, they just keep finding more and more stuff. Outcropping porphyry style copper and gold mineralization has been discovered over a significant 4.1 kilometer area at Previsto Central. The new discovery coincides with a 10 times 5 kilometer large airborne magnetic and radiometric potassic anomaly. These are not small anomalies. They have a huge portfolio, this is a scale bar. This is 50 kilometers. This is Previsto in the northern there. Okay. Previsto Central unmapped target 10 times 5 kilometers, and this is one of them. Previsto Central. Up here we have the Previsto East target already. So the way I see Hannan is basically they have a smorgasbord of porphyry, skarn and epithermal targets. Basically it seems that they have found a near surface untouched porphyry district in Peru. Plus they have the deal with Yogmek for the sediment copper hosted, you know, the Ivanhoe Mines kind of target. These are really, really big anomalies. Seems to be near surface targets, and they have a lot of them. It's not often, I don't think, you find in today's day and age a near surface porphyry cluster. And I think the stock ended down. So this is also one that I actually bought some simply because the implied value went up. Maybe, I don't know by how much, maybe, who knows, $20 million, and the market cap is like 45 or something. We don't know. But I swear some of these juniors, when they put out news, because they're so cheap, I mean, they're starting off so cheap, so some of the news you see out there is like worth 50% or more of their current market caps, and the price doesn't respond. And of course, in hindsight, let's fast forward when they actually are drilling these targets. Let's say they miss on all targets, and then one could say, yeah, the market was right all along. It was actually overvalued at 45 million market cap or whatever. But that's not that's not how it works. Because it's Schrodinger's cat. If you find something that's like, hey, there's a 5% chance this is worth $1 billion. That's 50 million still. And 5% chance is not like, oh, that's a guaranteed slam dunk. No, I would say that's probably pretty pessimistic. Still, that's 50 million. If we're talking 5% of something being worth $1 billion. So yeah. Does it make sense that the price went down? No. So again, it's like, how hard is this sector really? It's, in my opinion, the only reason, or the main reason that it's hard, or potentially hard or whatever, is because it's so ridiculous, it's so chaotic and noisy that nobody has an idea what to think. And if you go by the price, that's like Homerun when they released the LOI and the price went down 5% or something, or 3%. Oh really? The company's worth a bit less, regardless of the front running or whatever, or possible front running. Still, that's a joke in my book, so I averaged up. And again, it's like, if to wrap it up, it's like in the case of Magna, price went down on no news. So I reshuffled, bought some more. Hannan put out news. The stock didn't change or went down a bit. So I reshuffled and bought some more. Homerun put out, well, what could be company making news. Or it's like an LOI for a company maker. So maybe there's, let's say 50% chance that that deal is going to end up being, in contract form, and they're going to start up the production, and that's going to materialize. If it's 50% of 50% of the blue sky of that deal materializing, Homerun should probably be up 100%, 200%. I don't know. It didn't. When you think about it, it's like the margin for error is so huge. We're not talking like, oh, this news added, I don't know, 5 million in implied value and the stock went up 3 million in market cap. Oh, I have a 2 million arbitrage or whatever.
value opportunity. No, I think some of these juniors put out news, especially relative to their current market cap, that's like, whoa, even in a pessimistic scenario, this news is worth 20% of the current market cap, or 50%, or 100%, and they don't move in price. That is just absurd. That's not a rounding error. Those are some grave mistakes by Mr. Market. I mean, you would be happy to spot a few of those cases every 2 years. Now we're seeing it across the board. It's just unreal. But it's gonna continue to, again, until, or let's put it like this. Let's say a discovery store. Let's say Hannan. It's like, oh, we just mapped out a huge new target. And again, let's say that misses. And the market didn't reprice it today. Fast forward a year, they tested, they miss. And it's like, oh yeah, of course, you see, market was rational because they didn't think it changed the value. I mean, that's just bullshit. Still, that's just bullshit. Because in the case of success, and we don't know what percentage is or how high, the price is, but then it's going to revalue more than it probably should, because it started off not giving any credit that could actually turn into a major target, even though it's like the footprint is suggesting that's a major target. That's why you always see, it's like, everyone is so smart in hindsight, like, oh, I don't think that target is going to turn into something, and they don't buy a stock or they bash a stock. And it's like, let's say it's early stage pre-discovery target, high risk stuff, like 80% chance of failure. It misses, and they're like, see, I told you. It's like, wow, this whatever, let's say a 20 market cap company drills a no-brainer target, and you still, let's say, if you're conservative, you're like, oh, there's a 20% chance of success. And they miss, and people are like, yeah, see how stupid people were to have bought it. Let's say you were short that, and it turns out to be as good as it looks, and you get your face ripped off. I mean, my point is that people don't typically short. They're smart enough not to short it, but they're, I don't know, have egos big enough to think that there's some kind of Einsteins for, oh, I don't think that's going to provide a, company making discoveries. Like, how many company making discoveries, or how many significant discoveries are there per big anomaly? It's not like every big anomaly turns into something. It's just when they actually turn into something, if you start at a low price, they can go up. I mean, just look at the nickel space, for example. What are it called? Like Nova Bollinger. Oh, it went up 4,600%. Which means it was pricing in no chance in hell they were going to find that discovery. So when it happens, it actually returns so much that you don't need, in theory, a high chance of success for those bets to actually be good bets anyway. Because if you had 100 different, or you own 20 different Nova Bollingers, let's say, I don't know, 3 out of 20 made a Nova Bollinger discovery. I mean, it's actually much less than that, but if 3 out of 20 actually made it and the rest were cut in half, you would still make a lot of money just from having a 3 out of 20 hit rate. Condor Resources, Quinton has come on board. I took some, I'm not going to say took some profits because they were losses. I sold some over the last, I don't know. I mean, I shed some shares here and there because I had such a, even after the big drop, it was a really fat position. Now I'm actually tempted. I bought some stock recently because I think 20 million. Okay, we know Cabral, that's probably going to get drilled. Pucamayo seems to get another phase of drilling. Quinton speaks highly about the Andrea, which is a huge
high sulfidation target. So I think and if Quinton gets on board, I think maybe more stuff will be happening, etc. It's going to speed things up, better access to capital, more let's say promotion, whatever. So I think this is also one you can put it in the camp of the Kingfishers, the Inflections, the Hannan Metals, the whatever other early stage pre-discovery place I've been talking about, that if they make a discovery, 20 million market cap's going to look low. What the chance are that they're going to hit at either Pucamayo, Cobra Orco, or Andrea, or when that's going to happen, I have no idea. I just know that if they make a discovery, and they seem to be legit targets, all of them, if they make a significant discovery, 20 million will look very cheap. If there's a 30% chance they're going to make a discovery on either of those projects, I mean that at least you're going to make one discovery, let's say. 30% chance of a significant discovery, you get 3 kicks at the can. I think 20 million is cheap. So yeah. Again, it's like, I think all the companies I've talked about, of course I don't give out buy recommendations, but it's like, I think they all have good risk reward. They just have some of them have very different risk profiles. And the higher risk ones, you need to have kind of smaller positions in, because you need to diversify away the company risk. Whereas like in the case of Magna, where I think you're buying what's already proven, so you're not taking risk with the drill, you're buying what the drill has already showed for less than it's worth, plus you have the added bonus of exploration upside. So those positions will typically have much higher weighting, because the way I see it's like they can't destroy the project with the drill, they can just add value to the project. And if you're buying it cheap already, that's free risk-free upside kind of. Long rant. Thanks for listening. And of course I'm biased. I don't know which one of these stocks is gonna do really well. I don't know if I'm gonna make money on any or all, some, few, a lot. I hope you know what I mean. That's obviously why I'm not all in on any single stock. But I think all have favorable risk-reward characteristics. Just think some are riskier than others. Some have more upside potential than others. Typically that coincides with how risky they are. And I'm biased therefore. And some are banner sponsors as well, so consider me twice biased. So yeah, I mean, I obviously haven't gone through my entire portfolio or all companies that had news out, but these were off the top of my head. Some actually have recent news. Etc. So yeah, thanks for listening. This is not investing advice. Have a good summer. Bye bye.